For this stock, Julia, we've seen it become almost the whipping boy, if you like, of the negative sentiment around mining services.
Looking at mining services, it's those companies that are exposed to the exploration part of the cycle which have been hardest hit, and that's because as exploration companies, they're usually smaller companies. They're having difficulty raising money in this type of market, so they're really pulling back on exploration, and that's having a massive impact on a company like Boart Longyear, which deals in drills as well as drilling services. So if we have a look at Boart Longyear and what they're saying in terms of the market conditions for it at the moment, they're saying that the downturn that they're experiencing and the operating conditions very similar to 2009 throughout the global financial crisis. Especially most concerning, I think, out of this result is the drilling services part. If we have a look at utilisation rates for the first half, they've been around about 50%, and that compares to 70% at the same time last year. But if we have a look at the numbers, we've actually seen deterioration in 2013 quite severely. Back in May, the utilisation rates were at 60%. Now in August, we're seeing them at 50%. So we've continued to see a drop-off in those utilisation rates, and it does look like that trend's going to continue into the second half of the year, which is why we've seen the downgrade for the second half. So all in all, a disappointing result coming through from Boart Longyear and a very negative outlook as well. Understandable given the lack of activity in that exploration space at the moment.
Do we see consolidation in this sector, do you think, Julia? I mean, do all the players on our market at the moment, listed players in this mining services, do you think they survive the next 5 years?
I think it depends on the type of mining services company. Those ones with reoccurring. Boart Longyear with the drilling services, it's all about exploration, and that's around commodity prices. If we do see a rise in commodity prices, that will start to have a positive flow-through effect. But at the moment, what we are seeing is that we're seeing a huge pullback in terms of exploration spending. If you have a look at capital raisings, the capital raisings have been more towards the mid-size to the large end of the market rather than the smaller end. So I think we will see consolidation for those smaller miners first. And if we do see consolidation in that area, that would be, I think, a positive for that space, which is really struggling. But of course, with Boart Longyear, it's about diversifying its earnings out of that exploration exposure, which I think would be quite a difficult thing for Boart Longyear to do. So a really tough space. Really what we're watching for an increase in Boart Longyear's earnings is a recovery in commodity prices and more activity from exploration, and that will mean capital raisings in that small exploration space.
Another stock out today, Caltex. Slight lift in half profit, it looks like. Decline in the Aussie dollar hurting, Julia, but their shares up around 2%.
We've seen Caltex coming in line with expectations. So on a replacement cost of operating profit, we've seen it come in at $171 million. They were saying that they were guiding between $160 to $175 million, but that is down from last year where we saw a result of $197 million. The sudden drop in the Aussie dollar in May and June did have an impact, and that's because Caltex buys supply from overseas, and so it buys it in US dollar terms. So the fact that we've seen the Aussie dollar falling has been a negative from a currency perspective. So if we have a look at the gross loss from the currency impact, it's $85 million. That's been partially offset through hedging benefits of $46 million. Not only that, but in the period we did see premium supply in Sydney coming to a standstill for a time, and that's because of a pipeline. And we also saw an outage at its Brisbane refinery. But looking forward, this is a stock that's looking at closing down the Kurnell refinery, and that means the earnings are going to be less reliant on the more volatile Caltex refining margin, and it's going to be more dependent on the more stable marketing part of the business. So looking forward, this is a changing business. The results coming in line with expectations, but that energy sector is expected to get a lift today, and that's because we are seeing some pre-war jitters around possible intervention by the US in Syria, and that's had a positive impact on hard assets like oil, like gold. Oil prices up by 1.3% in New York, and we saw gold prices up by 1.8%.
Aussie dollar, as you say, a falling Aussie, it hurts because it's a buyer of oil, but will it help in terms of refining margins further down the line as it looks to actually sell the product that it's refined?
I guess if we have a look at that refining margin, it's going to be a less of an impact in terms of Caltex, and that's because of the closure of the refinery business. So it's going to be more around its marketing business, and I guess the Aussie dollar will have a bit of a lagging effect as well. There are some hedging benefits in place at the moment which should help to offset, but looking forward, the Aussie dollar should have less of an impact on its business, because if we have a look at the marketing business, it's an Australian dollar dominated business. So the refining part of the business, which is extremely volatile, which is reliant on things like oil prices and like currency movements, Caltex is going to be less reliant on that part of the business, because we are seeing the closure of that Kurnell refinery. It's going to be turned into an import terminal, and instead it's going to be more dependent on the stable Australian dollar dominated marketing earnings.